CTM. What's going on, everyone? I hope you're well on this Thursday. CTM doing CTM things. Head snack. That's a meme being born. A meme. Speaking of memes, Jordan, would you focus on the technicals? That's really, really appropriate. I used to make fun of people because we were always on the right side. And now that has become, as people are all this hoopla, right? Bunch of hoopla, and all of a sudden everyone is like mega bull on the Nasdaq and Nvidia to the moon, and we're just like, hold my beer. Like, Jordan, focus on the mechanicals. And it's all about mechanical trading over here. Into the close, by the way, FNGU taking another long trade. That trade is currently 7.8% into profit, building off of an explosive gain thus far in 2023. And look, that could have went the other way just as easy. You know, when you're trading stocks, unlike cryptocurrency that is trading 24 hours a day, 7 days a week, you are able to exit at any point in time. And that's not the same when you're dealing with the public markets, with the stock markets. People's perception of the cryptocurrency market is really taking a hit. I don't know whether or not that comes from Jamie Dimon or the likes of Warren Buffett, rat poison squared, and or if it comes from the massive fraud out of things like FTX. But if you look what happens inside the public markets, I mean, granted, it dwarfs the size of the cryptocurrency market, and therefore the amount of fraud that takes place dwarfs it. But man, I don't even know how I got off into that tangent. But look, when you're trading, I was talking about stocks. I got to pull up. I got to try and pull up over here the brush. There we go. Launching the screen brush, getting that active so that we could get to work over here today. Gio, a couple of the things, people asking about what happened to the outline. For a long time, we were doing our outline throughout the CTM sessions. I didn't even know it was missed. That's good to know. That's easily to implement and bring back into it. Probably start that on Monday. I have a feeling tomorrow's session is going to be in-house. I want to build off of last Friday's CTM Summit. I want to talk about some of the things introduced, get that video up to the community, and talk about some things that we're working on in-house tomorrow. Right now, I just want to make sure we cover the markets and honeymoon, right? I love the honeymoon. It was not allowing downloads for us. For some people within CTM like to listen to the replay on the way home from work. And for whatever reason, we'll have to work around it, figure it out. But you know what? Let's focus on markets. And this is where we find the most signal when you're trading inside the stock market. Now, not just on weekends, because on weekends you get into a position there could be gaps. Also on, we only trade regular trading hours, RTH. Some people might think that, wait, why are you doing that? If you're trading the extended hours, you're going to be more profitable. And I just want to show you that if you add the extended trading hours, watch the net profit, right? And you can see that it substantially diminishes, as does the max drawdown, because the number of trades and a lot of those trades are not producing the profit that we're looking for. Regular trading hours is how this strategy was developed. You could see it's about 1/3 of the amount of trades. A lot of people think more is better. Now, when I started to develop this strategy, the solution, I started on extended trading hours myself. It just so happens that, you know, sometimes less is more. And in this case, less is more, not just here for FNGU, FNGD, but for all of our solutions, whether it's TQQQ, Tesla, everything out on stocks so far has been regular trading hours. And that means you could have gaps. And if you look at the list of trades here, performance summary, and I could find out, you know, knowing and understanding that the stop loss is 1.2%. And I could look at my max, my greatest losing trade, and that's a 6.81% stop loss. That's because you cannot execute a stop loss outside of regular trading hours. So if you have a gap, whether it's overnight or on the weekend, your stop loss, whatever it is not going to get executed until the market opens. So even though in this particular case you saw the stock gap up, that's not always the case by any means. And I just want to make everyone aware of that. Again, this is kind of, Nvidia taking massive market share. Some people are wondering, well, the altcoin market's at half a trillion dollars and Nvidia is exploding in market cap. Why can't they all of a sudden? I mean, Nvidia just has forward guidance for this next quarter of $11 billion in revenue, $27 billion in 2023. It's bringing in billions and billions of dollars. I know that like BNB, they take part of Binance's profits and burn the token. I think somewhere they've done around $600 million equivalent of. But I have trouble going through the rest of the cryptocurrency market, finding projects that are producing revenue like Nvidia. $11 billion projected this coming quarter, 27 billion. And you know what? People need chips. We are seeing the advancement of these algorithms, machine learning, AI, whatever you want to call them. And we're seeing growth, looking at Microsoft ChatGPT. OpenAI is doubling on a monthly basis their user base. So there's a real world demand, a real world reason. I also want to point out to you that right now, currently in 2023, you're looking at FNGU, if you were just holding it, outperforming CTM. Because, like if you're looking at whether this is on stocks or on cryptocurrency, CTM 2.0 is always going to outperform buy and hold. I say always loosely. It's the markets. Anything could happen. Nothing is guaranteed. And that's just the truth of it. But if you're looking in 2023 and you decided at the beginning of 2023, why most people were extraordinarily bearish on the markets, to buy FNGU and hold it, you would be outperforming CTM 2.0. You would be outperforming it. The thing is how do you know when to buy and when to sell and for how long to hold? It's an important distinction. I think that it should be made right now, as a lot of people are getting very worked up, following what has happened afterwards, not being preemptive of that all. So Tether right now is, so I forgot, Brendan, that's a good question, right? Tether should be included in this. So if someone could correct me, I'm going to say it's something like 32 billion. No, 32 billion. What am I talking about? What could someone find out the number could someone please find out the number? Just do a quick search right now. I know that we had a tweet that we looked at last week, and right now they have a substantial amount of money. Is it $32 million they're purchasing a quarter into Bitcoin? Is that where that 32 is coming in from? Tether right now is holding a bunch of US treasuries, which are yielding high rates, 4 and 5%. And Tether is taking that profit from the yield of the treasury, and they've currently been purchasing Bitcoin, right? A lot different than Luna, which was trying some type of like whatever you want to call it. Tether right now, because of their US treasury holdings, is able to go ahead and take that profit right now and purchase Bitcoin. And that's going to last as long as yields stay elevated. We don't know how long that is. I think that's really smart and really good. Now, what's funny is the greatest risk to Tether right now is the US government, which is crazy if you think about it. And why I imagine the odds of the US defaulting are really, really, really small. They're not zero. And if the US government were to default because there was an accident in this brinkmanship and, at that point in time, could you imagine that the blow to Tether was the U.S. government defaulting? Man, that's Brandon. Thank you for looking that up. 1.48 billion. So that's something, right? Out of the whole cryptocurrency market, and maybe we should have said altcoin market, maybe, because the Tether is not rising in price, right? Staying pegged to the dollar. It is a stable coin, but that's something real. That's a really good use case inside the ecosystem as well, and that makes sense. And I'm glad you brought that up because that's true. It doesn't compare to what Nvidia is doing, but that's true and that's good. Yes. That's a good thing for. I mean, do you think that potentially it could outperform FNGU? The thing about FNGU it is that it is a 3 times leverage ETM product, and there's no question that that adds in some nice alpha. I'm sure there are some type of leveraged products on Nvidia as well, but that's a good one. I've looked at the semiconductor space before. I wasn't able to find a solution that is attractive as far as we're concerned. I think it did like 500% from over the last 3 years, which is not really an attractive solution for us, right? But we should test it. We should definitely look at it, and that's something that even overnight I would like to try to get in. So Kenny, so that's a big discrepancy. What did they do with the 1.48 billion dollars in profit? Does anyone know about that? And I like, by the way, Tether. I mean, yeah, Tether being able to dollar cost average into Bitcoin because long term, I'm quite bullish on Bitcoin. And if you look at this chart right now and you zoom out and we look at right the long term technology adoption life cycle and Bitcoin here continuing to do Bitcoin things and right now the title of this video is a position of strength into the next debasement phase and right now right the currency the US dollar is not being debased. We're in a tightening cycle over here and the opposite is happening, but that's only going to last for so long. And the more you could do to put yourself into a position of power during this particular time, because we don't know when it ends, and we'll look at that in a little bit. But when we look at this and we say, eventually, the debasement of the U.S. dollar is going to continue. It's a Ponzi scheme, and why you could raise rates and why you could taper that Ponzi at the end of the day, the only way that it could continue is to continue to debase it. That's not happening right now. Now, maybe in 2024 it will. Maybe we see that the U.S. Treasury is looking to do their buybacks, their yield control curve, stealth QE. And at that point in time, likely we start seeing the balance sheet of the Federal Reserve start to rise again. If you look at what's going on right now, this is monetary base total, and it's not going up, it's going down. And then you could look at this and say, well, no, it's going up and Bitcoin's following it. And that's true, but this is lagging data. They give us lagging data, and we're looking at when the U.S. banking crisis happened in that one-time expansion of the balance sheet. And if I go ahead and I pull up the balance sheet here, you could see that, oh yeah, it's going up. They tried tapering it. And then they had it, lift it up. But this is lagging data that we're looking at, and you could see the correlation. If you bring it up now in real time, and I bring up the balance sheet for you, you can see that no, since that one time off, it's going the other way now. And that's expected to continue. I mean, this is all variable. And if at any time something breaks and they need to return to balance sheet expansion and not a one-time off event, we're going to go ahead and incorporate that into our analysis. But not only are they drawing down the balance sheet, we are also looking at what I've deemed the liquidity crunch to come. Other people have talked about it, double whammy tightening. And that is once the debt ceiling debacle is settled, the US Treasury needs to return to the market and refill its coffers that it's exhausted throughout 2023. And that's something we talked about, going back into January and December. We talked about the first half of the year. Well, quantitative tightening is going to be counteracted, and that's likely going to give a reprieve to risk assets. But I don't think that's what's going to happen going forward outside of something breaking and them having to address it. So what we want to do is make sure that we stay in a position of power. That could be achieved a few different ways. One way that it could, remember when Michael Saylor told you that all your models were broken? A simple model would have significantly helped Michael Saylor. A simple model would have significantly helped him do a better job about when he got into the market, how he got into the market, and put himself into a position of power, because we don't know what happens between now, which is we're still raising rates. Fed expected to continue, even potentially raise the rates another 25, 50 basis points this year. Market had been pricing in rate cuts, market beginning to take away that pricing of rate cuts because it doesn't look like it's going to happen. That tightening does have a lagging effect on the market. We want to be ready. There's a couple of ways you could stay in a position of power. One of those is not getting yourself over leveraged or over positioned at a time where it doesn't warrant it. And right now is not a position to be playing offense. Another way you could do that, of course, is through CTM 2.0, whether you're trading that on the daily or on the 8-hour. There are many ways you could do it. The best way you could do it is through that awareness. I wanted to look at FNGU in relation to new all-time highs being made across Bitcoin, across Ethereum, across Cardano, and looking at FNGU. And the truth is that we got FNGU at the bottom, and you're looking at its account balance. And the blue line is every time it makes a new all-time account high. And then you're looking at the green line, which is the account balance. I call this running sideways. And more often than not, that's exactly what CTM 2.0 is doing. It's not up and to the right, even though it looks up and to the right. It's actually most of the time running sideways. Now, this whole period, right, you're looking at from March of 2020, and for the whole year, you saw FNGU running sideways, right? What was going on with cryptocurrency during that particular phase? Let's take a look at that. And we were looking at March 2020, right? Starting over here, started running sideways. And let me just go like this and like this. And you could see that Ethereum over here was making, I'm moving the mouse across FNGU on the bottom, but watch what happens above. And Ethereum during that April was making new account all-time highs. And let me just jump back over here. I thought that looked like a longer period than it is. So it's February through April. That's not that long. I thought it was a long time. Oh, maybe this is where I wanted to be. I'm sorry about that. October 2020 through January, another 3-month period. Hold on. There we are. And so during that period, FNGU, FANG, going sideways. But on the top right, I see Bitcoin making new all-time highs in that December 2020. That's actually where Bitcoin went on a massive run. What I wanted to see if at any point in time is giving an edge where you're seeing cryptocurrency running sideways, because just like FNGU, most of the time, cryptocurrency is also running sideways. Even though that it seems that it's up and to the right, what's actually happening is that the account is running sideways. Got that off a little bit. I have to fix that. And you could see it happening in 2023 because we are looking at Cardano, Bitcoin, and Ethereum, right? Ever since March, we've seen Bitcoin running sideways into drawdown. And at this particular time, FNGU is obviously making those new all-time highs. And I think that it provides the same way that the beautiful dance occurs between the three. Adding that allocation in is going to help obviously smooth out the overall equity curve. And FNGU D, the inverse, needs to be included as well, because throughout 2022, as you were seeing price not making any all-time highs, right? You saw 124% on FNGD. This is price just going sideways during this period over here because you were seeing a bear market occur in equities. But FNGD, the inverse of this, had 124% return during that phase. And obviously, whether it was Ethereum, Bitcoin, or Cardano, or all spectacular returns in 2022. Bitcoin was the lagger, 85% return, and Ethereum 295% was the leader. Cardano in between at 200. So right now, Bitcoin looks to be that it is, judging from past behavior. Let me go ahead and remove that 1 second. Lining the cycles up from the halving, the day of the halving, you could see that, well, there's been some symmetry between the all-time highs of the previous cycle and this current cycle, as well as when they bottomed out. And if you looked at what happened this time of cycle in 4 years ago, Bitcoin started entering what was a phase of accumulation and drawdown. I'm going to go ahead and admit this piece. This over here was a black swan event. And likely, had that not occurred, that there's a strong chance that we wouldn't have broke down too much further. I'd say, below $7,000, $8,000. But indeed, we did have global lockdowns, and that caused Bitcoin to come ahead and test the low of the bear market. This time is different in so much as that we're looking at price of Bitcoin here. We're looking at the market entering into, during this tightening cycle, a slowdown. Normally what happens is the Fed begins raising rates into a lot of strength. This time it looks like, and it appears like, they did it because of inflationary pressures. They undergone one of their quickest tightening cycles in history. Now we are looking for cycles going forward to be a lot sharper, a lot shorter in a duration, a lot more, let's say, magnitude of. Last time it was $4.1 trillion, followed by another $2.5 trillion of QE over the next 2 years. Next time, going back even to 2008, it was only $700 billion. The next time they have to go ahead and really expand that balance sheet in a one-off, I imagine it's going to take a lot more than $4 trillion to do it. And that also might mean the next time they come into the market, that the tightening is also going to be really sharp and really quick. Now, one could argue at this particular point in time, though, that, well, they weren't tightening into a slowdown. The economy has been resilient. The economy has been strong. And while a lot of people thought in 2022 we were entering into a recession and that something was going to break, that's not what happened. And you could also say, well, Bitcoin bottomed last cycle at the end of the rate hiking cycle and then had this massive run up. Well, they're still hiking rates as Bitcoin had this run up. But what we saw was those inflationary pressures come off during this time. So there's a lot of differences going on, but it does appear, while in 2019, the economy was still doing quite well. Actually, in 2020, almost every investment desk thought there was no chance that the US would enter into a recession, even though that's exactly what happened because of the lockdowns. At this particular point in time, a lot of people are very concerned. And I think that, a lot of people, some people thinking that price still could do Bitcoin things and go on to make new all-time highs outside of any type of an event. And an event would be, returning to quantitative easing. And right now the opposite is happening. I don't really foresee that happening. I think the best case scenario at this particular point in time would be mirroring these past cycles, and over the next 6 months or so, coming into some type of an accumulation phase. Some people think that this cycle over here wasn't an accumulation phase. Well, price went actually sideways for 6 months into drawdown. So I'm going to call that an accumulation phase before going ahead and starting to make its next leg up. Same thing happened over here. Price went sideways into drawdown, much like CTM 2.0 running sideways. And I think that's the best case that we are looking at, maybe price somewhere between, let's call it, 20,000 and 40,000 in that range over the next 6 months. And if that happens, that's going to be sign of some pretty healthy stuff, right? Assuming that the floor doesn't drop out outside of the US economy at that point in time. I think that as we move towards 2024, Bitcoin is going to be into a good place. I just personally, that's my best case scenario. Just throwing it out there, hopefully help you prepare. I think Litecoin actually at this particular point in time may be a good test for what happens to Bitcoin. A lot of people are looking as Litecoin comes into its halving event for some major price appreciation. If that were not to occur, I think at that point in time, we could look at that and say, well, maybe this time is different. It was different for Litecoin. We'll continue to watch that. And a lot of people don't like to look at potentially bad things that could happen. I don't know why it is. I feel like that you're just more protected at this particular time. If we were to come into some type of accumulation phase and this go into November around that area, that's really healthy, right? If at any point in time we lose this trend line over here, though, and we have this trend line on our normal charts that we looked at, just looking at a different view, at that point in time, this time is different. We want to be prepared for it. There's going to be a time to play offense. This is not the time to play offense. This is the time to be careful. Let's take a look a little bit at what's going on over here as far as Bitcoin. That and Chris, so Tether's profits are dependent on U.S. Treasuries as well, right? As long as those rates stay elevated, they're going to be collecting yield, and then we'll be able to. So it looks like for the rest of the year, for the next 6 months, that rates are expected outside of an unforeseen event. Rates are expected to stay elevated. If that occurs, Tether's going to keep DCAing into Bitcoin, and that's good. That's just all like good for them. In 2024 though, there is the potential for many reasons, including the state of the economy, including the short-term debt that needs to be rolled over, as well as the projections of overall market analysts and the Federal Reserve themselves that they're going to have to be cutting rates at some point. And when that does, that's going to take away Tether's ability to dollar cost average into Bitcoin. But look, they took advantage of it at the right time. And if you look over the next 10 years, expectations are, at least the ones that I embrace, is that we're going to be looking at yields continuing to be elevated. And so I think that over the long term, I think Tether just continues to get into a stronger and stronger position of power here. Again, the greatest risk is the US government, which is not nothing, and it is true. And if you've been following this channel for years, you've known that I've always put down the Tether FUD. It's like something that's been around for as long as I've been in the cryptocurrency market. And people always worried about Tether, and I've always written that off as FUD. I don't think the US defaulting would be FUD. I think that's something that could be scary, and Tether would not be immune, and nor would Bitcoin. Let's continue where we left this off, and we moved this line down yesterday. This line came from up over here, and we just brought it down over here to show the symmetry. Kind of neat on the daily time frame that price was not able to close below there. So Bitcoin hanging in, still on the verge by a thread. If we add in further lines, it's where our stop loss is for the current short trade that's currently in the market, and the entry for that short trade was all the way down over here. Would have liked for it to been on the breakdown of this trend line. That's just not how it happened in real time. Real time entry all the way down over here. Exit for the trade is a break above the red trend line above. And if this breaks down over here, we're looking at the next leg down on Bitcoin. Now, if price is able to hold where it is in this downward sloping channel, if we're able to hold this light green support that we're currently on, at that point in time, once we break out above this trend line that I'm highlighting above, This is whether you call it the right now resistance of the bear flag, bull flag that Bitcoin is trading within, or if you call it just the upper resistance of this channel. Either which way, it has the same effect. That is a buy impulse occurring and the opportunity for us to be resuming upwards. Right now, I would say though that we are looking a little bit weak. What's going on with the market? Let me just go ahead and really quick check. We're looking at the NASDAQ off of Nvidia making massive 2.4% gain. Dow is looking really weak. I don't have it up over here, and S&P is turning in the red right now. And we look at cryptocurrency and we see that Cardano showing the weakness, and Ethereum and Bitcoin are not buying what the NASDAQ is selling right now. And that's largely because we are looking at the lawmakers, I do believe, about to go away for the holiday weekend in the US without any type of resolution of the negotiations. And it looks like everyone is aware that even though Janet, there'll never be another crisis Yellen in our lifetime, told us that, June 1st is the deadline for the default, that's really not likely. And I think that they all believe they have some time. My question is, if they go into the weekend and they could be called at any point in time to return within 24 hours to vote if they need to a short-term extension on the debt ceiling. It doesn't look like what the Republicans want to do that. It looks like today the Democrats are trying to pass some type of let's call it limit up extension here without the leadership of the Republicans. It doesn't, I mean, I doubt they'll have the votes to do that. I'm assuming that they go away to Martha's Vineyard for the weekend without any deal. And the question is, how are the markets going to respond to that? Are the markets going to be comfortable with that? Or is the panic of the markets going to begin to set in to kind of give some haste and urgency to these lawmakers? So far, crypto is leaning towards that being the case. Again, and I feel rightfully so. The revenue expectations for Nvidia was a massive beat by billions of dollars, and why it's very rare to see that type of price action. Is Nvidia now $1 trillion market cap or close to it? To see some type of large cap stock move up with that kind of it's the second largest candle ever in Nvidia's history, with its largest market cap now, right? Back to new all-time highs. Is that sustainable, or is that a sign of, some type of melt up? I don't really have the answers to that, but I could focus out on the charts. So let me do that. We'll focus on the technicals in 1 second. I just want to point out that we are very close to this pattern completing. This pattern completing is just a bearish structure forming. It is not usually the completion of the move. So watch out. This line that we have over here, that light green line, if price is closing below there, then we have a successful lower low retest. And, we've looked at our downside before. We don't really need to do that. But I would suspect that this is where the bulls would need to hold. If we extend out this trend line over here from the lower, this is just cloning the upper resistance over here. And you can see the symmetry over there. That could be a place that price finds support as well. So we'll keep that extended on the chart now. Let's take a look at what's going on here with the NASDAQ. I think we have a better view to do that off of. So let me just go ahead and find it. And I'll start over here. So this is the NASDAQ. NASDAQ over here is on 1, 2, now 3 repairs. Look at that. This is the 3-day. Let me come down to the daily. Look at that on the daily time frame. It's amazing. You could see price breaking above the resistance, coming in for the retest and holding, right? It's a hold on a daily basis. Now resuming up, and it's true. You could see this light line I have over here where we're making that new high over here, that new high in 2023, but into resistance. So I don't know. I mean, so this is interesting. Nvidia's market cap increased by the entire market cap of Ethereum. And so a lot of people, rightfully so, bewildered by the price action of Nvidia. At the same time, I mean, whether there's a lot of hype involved in the capability of AI or not, the growth taking place right now in the industry is massive. And we see Microsoft out with the lead, but we have a lot of people looking to play catch up. And I think that amongst them is Apple, Amazon, Tesla. They all have their own ecosystems that they would like to not have to rely on Nvidia for. And right now Nvidia does have that leadership and doesn't really have a competitor. And if we're going to see further expansion and growth, people need the chips to keep up. At that point in time, I mean, it's a cash cow. It makes sense. Don't forget Stanley Druckenmiller throughout the bear market, and even though that he's got much uglier expectations for what's ahead in the economy and in the markets, he's like, I'm going to be holding Nvidia, and I expect that it's going to be going up throughout all of this. And I mean, right now he's looking really good. He seems to be really right on there. But Ethereum has massive network effects as far as the cryptocurrency space is concerned, and it's also got massive problems that it's working through during this facing reality stage. But I don't know that it's appropriate to really compare Nvidia to Ethereum. I mean, obviously they're massively different things. One is basically producing chips, hardware. Another is a protocol. Man, I don't know. It, I can't say it doesn't make sense when you see a real world product producing real world revenue to see the market cap of that instrument going crazy. Now markets get crazy, and I'm saying this could be a melt up. Throughout all of this year, we've seen massive moves occurring on Nvidia, and it's not really sustainable. Often these things have, or what's happening right now, the price action is often what a top could look like. At the same time, markets could act irrational for a lot longer than could, than traders can remain solvent. So can we pull up a chart over here? I mean, man, for example, that's a massive gap up, right? You sound that? That's oh, that's Bitcoin you're talking about. That's a massive massive gap up. If at any point in time you see a gap underneath this low over here, that becomes the makings of an island reversal. Is that a place that someone could go ahead and manage their risk off of? If I don't know. I would not want to step in front of this. I'd rather wait to see some type of momentum gaining to the downside and this looking like it's actually going to roll over before even trying to do that. It doesn't seem appropriate to even try to, like, forget catch a knife, falling knife, catch an exploding rocket, especially like if you don't need to, right? If you could just be doing something in a methodical way that is producing results, what would the need be? It does. And Michelle, I mean, I feel like that, but I've seen so many things happen in the market that are ridiculous that I would not want to stand in the way of a freight train. And until there's any signs of breaking down, trying to get in front of it would just be ridiculous. I mean, Tesla was like that. If you look at Tesla and you go back and you looked at what was happening in 2020, where a lot of like macro bros were calling it a fraud and looking to go ahead and short it, right, at levels that were just. I'm just trying to see if I have Tesla up here. I mean, it was in this level somewhere, right? I don't remember. No. It was in this level, right? Around 20. This move over here on Tesla, people thought was ridiculous, right? People thought, wow, that's just doesn't make any sense. Tesla is making this massive move up. And a lot of people here really began building massive short positions into Tesla. And now I'm not also comparing Nvidia to Tesla, but I'm just trying to make a point. I do think that there are real fundamentals. And I don't think it's fair to be comparing what is happening inside Nvidia with what's happening inside of most cryptocurrency projects. You know, I mean, Binance does produce revenue, right? But then again, we thought FTX was producing revenue. So I don't know. I don't know. Why is Intel doing so bad? I don't know. I think AMD caught the wind of that. It's not really where I focus, and again, for good reason. It's so complicated when you're dealing in the public markets to have to understand one company in particular. Forget about a sector and the differences between different companies in that sector. And not only that, it's so variable and dependent. I mean, I've always talked about one of the greatest edges you could have in the market, which is really complicated and really complex, is simplifying it down as much as possible. If your goal is to make money in the markets and you're able to do that, whether it's through discretionary trading, through following technical analysis, and then being able to manage risk off those levels, or be able to do that with a mechanical edge that is just kind of like more, even though discretionary trading should be, but simply like the casino, and over a given amount of time that you're expected to come out with that edge and with that profit. It's a lot easier than just completely speculating in the public markets, which are very, very, very complicated. I want to look at this from a standpoint of just traditional TA, and we could say that, well, do you, we talked about yesterday. I don't need to invert this, but price continues making repairs, and you can't get in the way of that. Whether it's rational or irrational doesn't matter. You can make the case for both, I am sure. Now, if I extend this up over here, I'm looking for when this breaks. This remains from the move out over here that occurred, the breakout above the bear market descending trend line. The trend remains intact as long as that holds. The first breakdown, the first sell impulse would be a breakdown of that. That remains the same and that continues. You could see that it is a rising wedge, right? You could see the top end that price is currently into, the resistance price is, it's making a horizontal breakout, but it's into resistance. And then you could see the lower support, and this is normally a bearish pattern. If this breaks down, lining up the technicals, a breakdown of a bearish continuation pattern, we're in a downtrend. This is a rising wedge in a downtrend. A breakdown is a bearish pattern. And then if the fundamentals of the US and global economy do continue to accelerate in deterioration, at that point in time, you could run into uh that's when the magic happens, when the fundamentals line up with the technicals, and it works on both sides. So it's difficult kind of being ahead of the markets and then communicating that, because that didn't work down over here. People were not ready for the breakout. And I remember at the time we're like, we just have to close our eyes because it doesn't really make sense. And that's exactly what it was. Anyway, this continues. Unfortunately, I think that we are in the hands of the lawmakers right now. And I'm not sure if anyone has any update of what they're doing before they go out on holiday. Now, as far as this upper trend line we have on Bitcoin for that buy impulse to continue, we still wait for that. This lighter line that we have drawn out over here, which is the red line on our chart, right? A break above that, though, that's likely going to send us towards at least this resistance we have up in this area. That's a significant move, a decent move, especially if that's why it's our stop loss, by the way, if you are trading this discretionary, right, into the trend line resistance, that is a 2.5% move. And then if we get this and we start breaking above, we still have this horizontal resistance and this channel resistance to worry about before coming into it's never easy. And anyone who tries to tell you it is, anyway. Oh, I don't think so. I don't know, but I consider Tether to be the safest out there and always have. But if the US defaults, I think that the best stable coin is the US dollar. And I know that sounds counterintuitive, but there would likely be a shortage of dollars, and we would likely see some dollar milkshake behavior occurring in the markets if the US was to default. Thursday session, light on likes. Let's take a look at what's going on. Or no, if you do enjoy being here and the time shared, go ahead and hit the like button. Do really, really appreciate that and ask you to do that. Let's take a look at what's going on for 1 second here with CTM across cryptocurrency. We'll look at the 8 hour and we'll also look at the daily. And I also want to look at TQQQ really quick. So let me start over there. And all right, chugging along over here, holding open position, 2% into profit. Let's start on the 8 hour time frame, and we could see now, starting with Bitcoin. Bitcoin remains out of the market, going on 3 weeks now, just remaining in a position of power. I could see this looks to me like a descending wedge, and just like an ascending wedge on the NASDAQ, it could be a bearish continuation pattern. This is a descending wedge on Bitcoin, and a breakout above could be quite bullish. We would be targeting first towards the $33,000, $34,000 area if we're able to resume up. But momentum is now rolling over, and you could see we are much closer now to actually sorry, I got that reversed. We're still closer to executing on the buy side than the short side. And I suppose that's because if I zoom out a little, it's clear we're on an uptrend. We are losing steam. That is rolling over. But at the same time, we are still closer. Break above that line is going to send us back along this market to executing on the upside. Thank you, Chia. I appreciate it. Yep. So is CTM a machine learning indicator? It is. It's actually a collective collaboration, right? Coming off of my 20 plus years experience in the markets, coming off the foundation and base of the system that I traded in foreign exchange going back to 2007. And then this massive hive mind collective collaboration through CTM. In 2022, the community was not open to new members. And it was just those who have discerned where they want to be and who they want to work with, right? That were working together on CTM 2.0. A massive collective collaboration, hive mind. So that I think that's more important. Now, we were using and do use machine learning tools, but at the same time, it's more than just a computer doing that. When you look at human ingenuity and you put all of that brain power together, looking to solve a problem, it's unbelievable. I call it providence because the things that we have achieved are just absolutely beautiful. But it is. There's no question about that. It uses machine learning tools. Uh, but I think that more than the machine learning tools, which there's no question have drastically reduced time and effort and helped with precision, that the collaborative effort is the hive mind is really beautiful. Um, so I don't know. To be honest, look, there are people who could help with the whole stablecoin problem a lot more than myself. I personally feel Tether is in a much stronger position than it was a year ago, specifically why the litigation by the New York Attorney General was undergoing. There was millions and millions of papers, right? At the end of the day, they were not like Tether was able to walk away. And since then, and since having a portion of its reserves confiscated, because that's what happened, like a portion of Tether's reserves were confiscated. And then I think that it has been very diligent, taking that time, and continues to be stronger and stronger in its overall positioning. But I don't know, just my thoughts. Oh, I see someone has gone ahead and shared the only leverage ETF for Nvidia, NVDL. It's a 1.5 times leverage ETF, which is interesting because the Tesla ETF that we look at is 1.5 times leverage, and the same settings for Tesla work on that. So I will be spending time today looking for any potential initial solution for Nvidia. At the same time, I feel better about the basket in so much as after the bell yesterday, you saw snow come in and it got obliterated in after hours. And then you saw um, Nvidia come in and just exceedingly beat expectations. And, I feel like that diversity inside the basket of the index probably is a better thing to go off of. My thoughts, but we'll look at it for fun. Often people look at the fruits of what we've done and they're like, that's so easy. But often I would say that 95 or more percent of all of the tangents, all of the research, all of the rabbit holes lead to nothing. And at the same time, all of that massive time spent leads to massive yield. And because you're learning the whole way. And even if you spend weeks down, like trying to figure something out, and then it leads to nowhere, all of that time and energy spent in the future, you'll be able to pull upon, and why it might be productive in something that you were not even expecting. I mean, that cumulative knowledge is just absolutely, absolutely priceless. Um, Sandra, God bless you. Thank you, and each and every one of you. You know, we've talked about so many years ago. People often overestimate what they could achieve in 2 years and underestimate what they can in 10. You got to keep at it. You got to keep working. You got to put the work in. That's what we said throughout all of 2022. We have our heads down and we just continue to work and build. People talk about building during bear markets. That's exactly what we did before people even realized it was a bear market. Brandon, I found the solution on that, and again, it's like a 500% return with a 30% drawdown, which does not compare to like whether you're talking FNGU, T triple Q, or Tesla. It just doesn't compare to the solutions that we have in place. And again, we tried, but that's not attractive as far as the returns that we are looking at or looking for. You can see over here, this is going back and to that same time period, and it's just a significantly greater return and with a less drawdown. And we're most concerned with low drawdowns because our returns are abundant. So we want to make sure that we focus on drawdown over returns. T triple Q during that same time. This is the long side, right? See the difference in between a 500% return, which I assume is higher now because the last time I looked at it was probably around January, February. But the drawdown is what's important over here. You know, a 17% drawdown compared to a 30 is much more highly desirable. All right. So we're looking at least Bitcoin and Ethereum on this Thursday trying to turn green over here. And we're looking at NASDAQ holding its gains. S&P 5, we didn't look at the dollar. Let's look at the dollar briefly over here together. And we could see the dollar continues its rise after breaking out of what was a descending wedge. And it looks like it could potentially even be targeting higher into this zone of resistance. A breakout above, I would find extremely surprising, and that would be a technical break that we would need to talk about. Yields continue higher, and oil continues its pressure over here. They're taking victory laps as gasoline prices are down $1 over a year ago. It came at the cost of draining the U.S.'s strategic petroleum reserve. There's worries about what happens when they need to start refilling it. No, I mean, maybe on like Black Friday or something like that. But um, look, a lot of people are not into investing into themselves. Like a lot of people will go out and spend a fortune onto higher education, which at the end of the day, most often than not, winds up just putting them in a massive hole. A lot of people feel that their educational expense into the market should be them losing money. I find that to be counterproductive and not very smart. Capital is precious. Do not be in a rush to lose it. And if you're competing against professionals in the markets and you're not, you're likely going to lose your money. And the team you get to work with, the quality of the solutions that we work off of, that we have in place. I don't know of anyone else in the space doing anything remotely close. And the cost is next to nothing. That's the truth of it. So S&P 500, thank you. So S&P 500 is, I mean, it's holding in. So Gio, all I'm going to say about this is downtrend, right? Broke out of here, barely made this test and held it and has been consolidating underneath resistance ever since we broke out of that purple line, right? It's just been consolidating underneath resistance, and that remains the same. This is the warning line, much like the NASDAQ, and we're not far from it, but we are above it, and we continue to consolidate. I imagine if we get some type of resolution in the debt ceiling, that the market's initial reaction is going to be favorable. How long that lasts, I don't know. But I imagine that it would be favorable, and we continue to see these upward forces continuing to do that. We know where they fade. We know where they're wrong. The red line on the S&P 500, and then we got this lower line here on the NASDAQ. We would love to have you. We would love to work with you, and we would love to have you. The first thing I recommend doing, right, is going ahead and, right, once you go ahead and copy this template, is going back over periods of time and every single period of time and looking at the performance and getting an understanding, right? And you could do something simple by starting since 2020, right? Or you could do like what's happened in the last since 2022, right? Or even 2023. And then you could go back, oh, what about since the top of the last bull market? And then you could start picking out difficult periods of time. Like what happened during 2019, right? Or June. This must have been a hard period. We'll look at it in 1 second. Between like what was happening under adverse conditions. And you can see this is a very tight range that Ethereum was trading in, right? It's a very tight range. And to be able to, first of all, it's a 6-month period. Do you have the fortitude, by the way, to be able to trade through that? Because most people don't. Most people are looking for whatever trade they take next to be a grand slam home run for them to go ahead and make the easy way, right? I'm just going to hold this position and this position is going to be the one. And that's not how trading works, right? And do you have the discipline over 6 months, 20 trades I mean, this is like break even. It's not, it's a 22%. And most of the best would be happy with that type of performance. But this is grueling. This takes a lot of work and mental fortitude and focus to understand what is required, because you don't get to what happens over the next year, right? Just add into 2021 if you are not able to make it through these tight periods, because markets go through expansion and consolidation. Expansion and consolidation. I don't need to put in this period. This period would obviously be outperforming, but I'm trying to make the point of what's required. And currently we're going through a period here of exactly that. We're looking at markets here after some beautiful gains in 2023. And by the way, they were captured, not on Cardano. Cardano did its thing at the end of the fourth quarter, 2022, and has since been running sideways. Here's an example of that. Let me show you. Cardano running sideways in drawdown. Last all-time high was in February, and since then, it is running sideways in drawdown. Now, that's like normal behavior, and that happens over and over and over. This is grueling. Are you able to go March 2020, April, May, June, 4 months going sideways? It happens almost all the time. Here's a bigger period, right? April, May, June, July, August, September, almost 7 months going sideways in drawdown. It's not up and to the right. I know that it looks up and to the right, but in real time, it's more like this. All right, everyone. Thanks for being here. Thank you for putting in the work. Thank you for doing something different instead of just, being out there for the entertainment, let's have fun and talk bullish outcomes and talk about like what the next meme coin could. Thanks for putting the work in. Thanks for taking the hard road, because that's what it is. And that's what it takes to be out there and be able to produce these type of results. Have a beautiful day, everyone. I'll see you all tomorrow. I'm not sure if we'll be a public session tomorrow. If it's not, I'll see you on Tuesday. Likely tomorrow will be CTM only session because there's some stuff I need to talk about. All right, everyone. Have a beautiful day. I'll see you later.